Hey guys, welcome back to my channel where I share my journey and insights as I grow a small account from $500 to $25,000 in just 1 month using a disciplined strategy and patience. Today's video will be a little bit different because I've received some great questions from the community, and these questions are important because they touch on the fundamentals of trading and can help others improve their results. And I will also provide an update on my small account challenge progress and discuss specific trades that have helped me achieve some success along the way. So let's kick things off with a quick update on my small account challenge. For those of you who have been following along, I started this small account challenge at the beginning of this month, which is January 2025, with just a modest starting balance of just $500. And in just 6 trades, I've managed to grow that balance to $8,992.18. That's an incredible 1,698% gain. This kind of exponential growth didn't happen by chance. It was a result of following a strict plan and leveraging the asymmetric compounding strategy. So today is January 14th, 2025, and as you can see, I didn't even take a trade today. Our AI momentum scanner created a decent-sized watch list for us, and I should have taken the trade on AIFF, but I just didn't do it. Instead, I was helping a few members in my pro traders group. So today was a no trade day for me, even though AIFF made an impressive 217% profit move. And I really could have made a decent trade on it. But guys, here's the thing. It's okay to sit back and not take a trade some days, even when there are favorable trades to take. And that's what I want to talk about today in this video, and that's when not to trade. So let's start it off by diving into some trading fundamentals. One of the most important lessons that I emphasize is the need to wait for a proper setup. Just because a stock is running or hitting smart targets that our smart target tool plots on our chart for us, the setup occurs when price proves a smart level as support. If you don't see the setup, then don't get into the trade. Chasing stocks without a clear plan often leads to losses. For example, VRME today. This was a previous runner that we had already traded on prior days. And today, when it hit the scanner again, it was running on a continuation without fresh news. So in cases like this, we often see pops to previously mentioned targets. However, volume tells us the real story. Initially, the volume was high on this particular move, but pop to the target occurred on lower volume. Now, that's a clear indication of an upcoming reversal. Furthermore, VRME tested the $5.45 smart target multiple times, at least 4 times, but it couldn't break that resistance and give us a signal above that $4.45 smart level. Whenever you see multiple failed attempts to break resistance, that's a strong signal to traders that it's time to sell. The takeaway here is that understanding volume and levels and whether or not there's a fresh catalyst does provide greater context to the move. If you can't explain why a stock is moving, it's best just to avoid trading it unless you have more clarity. Now let's talk about the next super important key fundamental when considering whether or not to take a trade. And that's the importance of entry, target, and stop loss before entering any trade. Before entering any trade, you must ask yourself 3 critical questions. What is my entry price? What is my target price? And what is my stop loss? If you can't answer these 3 things, then you have no business being in the trade in the first place. The initial stop loss should almost always be the nearest smart level below your entry. This ensures you're protecting your capital while giving the trade room to breathe. It also reduces your risk level to almost 0. Let's talk about the chart of SNGX today as an example. It popped up on our AI scanner as a stock to watch and wait for a setup. It made a very impressive big move from the $3 level all the way up to $5. And it made that move very, very quickly, just a couple of minutes. Unfortunately, that move was so fast that there was absolutely no chance for most of us to even take a position on it. The spread on this candle here was over $1. The setup signal that we were waiting for was above this $4.87 line. And so we were waiting for our algo to give us an arrow or some kind of decent continuation signal on volume above this level. And that just never happened. Instead, on this candle here, which was a buyer candle, a small one, with a tail to the support level, that could have possibly been an entry. But it was on lower buyer volume. So there was no signal there and there was no entry opportunity there. And the question that we were asking ourselves on this stock was, why was this thing selling off on good news? Well, later we discovered the company had just barely filed an S1 form for a public offering, signaling potential dilution. But here's the thing, guys. Even without knowing about this S1 filing, there was no setup on SNGX. The reality is nobody should have been in that trade since there was no buy signal and no proven support. The main point here is to avoid chasing. Chasing often results in buying at or near resistance, which are these lines here that our smart target tool plots on our charts for us. Chasing and buying at a target leads to losses when the stock reverses. Instead, focus on waiting for support to be proven and confirmed by volume. Now let's talk a little bit more about compounding strategy that I've been using. This strategy involves leveraging small, calculated risks to achieve large rewards. By compounding gains from one trade to the next, you can grow your account exponentially over time, and you can do it very, very quickly. This does require discipline and a strong understanding of risk management. For instance, let's talk about my trade on PHIO yesterday. That was my most recent trade in this challenge. And this is a really good example of asymmetric compounding. I entered at $4.75 and I exited at $8.83. Netting a profit of $4,153.44. This trade now sets the stage for larger position sizes on my upcoming trades, which will significantly boost my account balance. The key here is to scale your position sizes as your account grows, but only when you see high probability setups. Volume and catalysts are two critical components that traders often overlook. Volume confirms the strength of a move, while the catalyst explains why the stock is moving in the first place. And without these, a move is less reliable. In the case of VRME, the lack of fresh news combined with declining volume signaled that the move was losing momentum. This insight helped me to avoid getting caught in a potential reversal. On the flip side, when there's a strong catalyst combined with high volume, the likelihood of continuation increases. However, in these cases, you must also wait for the setup to ensure that the price respects the key levels. So let's take a closer look at my most profitable trade so far in this small account challenge, which was PHIO. And that was my most recent trade. The AI momentum alert hit our Discord at 5:51 a.m. yesterday, but I didn't enter the trade until almost 2 hours later, even though I knew about this stock. I entered this trade around 7:51 a.m. after opening bell at $4.75, and I exited at $8.83, securing that $4,153 profit. Could I have entered earlier? Well, yes, I could have, but for me, I needed it to prove this pre-market high support level before I entered. So I waited. What made this trade successful? Well, first, my entry was on a continuation signal here after it had made a strong move up. And so my entry was on this green arrow here above all of the EMAs on increasingly stronger buyer volume. In this case, since it was a continuation signal, my stop loss was the 34 EMA, which is this light colored solid moving average line here. And the 34 EMA serves as a trailing stop for me. As long as price holds above it, I'll stay in the trade all the way to my target. Second, I had a clear target in mind, which was actually the smart target that my charting tool plots on here for me at $9.45. But I actually sold at $8.83 because as price hit this target here, that's where I noticed buyer volume started to fade a little, and fading buyer volume signals a reversal might be coming. So to be safe, I sold into strength before the sellers pounced. This trade exemplifies the importance of having a well-defined plan. Without a clear entry, target, and stop loss, I could have easily sold too soon or been shaken out in this choppy mess over here. To wrap things up, here are the key takeaways from today's video. First, wait for the setup. Never trade a stock just because it's running or hitting targets. Wait for the price to prove a smart level as support. Next, avoid chasing. Chasing leads to buying at resistance, which often results in losses. Next, know your entry, know your target, and know your stop loss before entering any trade. So before entering any trade, answer these 3 questions. If you can't, then stay out of the trade. Leverage asymmetric compounding. Use small, calculated risks to achieve large rewards and grow your account exponentially. And this means not only do you need to know your stop loss, but you absolutely need to know in advance what your profit target is. That's where our super accurate smart target tool is priceless. It shows us in advance all of the important levels price will react to, both on the upside and on the downside. And also understand volume and catalysts. Volume confirms the strength of a move, while the catalyst provides context. Use these to assess the reliability of a trade. And remember, short interest can also serve as a catalyst. Stick to your plan. Discipline and patience are keys to long-term success. Don't let emotions or fear dictate your trading decisions. Trading is a game of strategy and discipline. Controlling your emotions is one of the hardest yet most rewarding skills to master. By focusing on a clear plan, using tools like smart targets and staying patient, you can ride the full trend and maximize your profits. If you found this video helpful, please hit that like and subscribe button for this channel. And be sure to turn on your notifications so that you know when the next video is uploaded. And I want to hear from you. How do you control your emotions while trading? Drop your tips and comments below. I'd love to feature them in an upcoming video. And if you're ready to take your trading to the next level and win rate in the 90 to 95% level, join us at MomentumStockTraders.com. You'll get all the AI momentum alerts, the Smart Target tool, access to my Discord channel where we discuss strategies, setups, alerts, trade guidance, and more. Until next time, stay disciplined, trade smart, and let's grow those small accounts together.